So hello everyone guys, and today we are gonna talk about how to enter successful deal with low risk and high profitability. Don't forget to follow my Telegram channel where I'm gonna drop all the materials from this video and watch till the end. At the end I will give you a one trick what will increase your profitability in 100%. And of course today we are gonna talk about risk management. So thank you guys for watching, and don't forget to follow to my Telegram channel where I'm gonna drop all the learning materials. Follow the link in the description and welcome. So how to enter a successful, very safe deal? Let's look on this example. Here we have a default formation of FUG entry point. I told about FUG in my previous videos. You can see one on the channel and what factors we need to use in this example. So if here we can see FUG, we need to define a 50% of it, and of course we need to define in which way the price are going to reverse. Still pitch FUG, and we are going to open a short position because the price is going to reverse the bottom. And the first factor here has two breakout structure. The first, and after the impulsive movement which formed our FUG, we has another breakout structure what show us a continuous downtrend movement. It will continue and bring us a lot of money. So in this case, when we see a breakout structure here is confirmed by this candle and this candle, which are attached lower than previous our pool of liquidity, we need to define a 50% with Fibonacci grid of our FUG, and after that has several ways to enter our deal. So here we can open short position from the beginning of our FUG with risky stop loss at the top of our FUG and get a risk reward ratio. It can be good, but another way is to open for the 50% of FUG with a risky stop loss. It will highly increase our risk reward ratio, what are very good for our trading job. And another way to open a deal is you need to change from which point you're gonna enter the deal, from the beginning of FUG or 50%. And another way to place our stop loss and increase safety of our deal is place it above our impulsive movement candle, and if the price break with meanings, it will change our mind in this price movement. So let's repeat again. We need to wait for the formation of FUG, mention breakout structure here, it's fake breakout structure, and after the forming of breakout structure at the opposite side of our FUG, we need to define the zones, find the 50% of imbalance and enter the trade from it and define our way of stop loss. And of course the most important thing in this situation, you need to find the global trend, because for example here we can open a 50-minute time frame deal, but for example on the 1 hour time frame we can look at the uptrend movement. So if this 5-minute time frame, this can be 1 day time frame, and it has global uptrend movement, and in this case if the formation appear to the 1 hour time frame like that, we don't gonna open the deal because this deal are gonna be against the trend. We need to look at the higher time frames because they are more important, they rule the price movement, and if the formation formed on the time frame like that is 100% due, and you need to enter in these situations. And if we reverse our chart, it's gonna work the same way because all the time frames are fractal and everything on the 5-minute time frame are gonna work on the 1 hour time frame. And don't forget, always look for the trend. The trend is your best friend. Well, now let's move to the real chart for the real example. And now one more trick. Here we can see a higher time frame, for example 1 day. Here we have our time frame, and we need to define our FUG zones, our point of interest zones on the lower time frame. For example, it can be FUG, order blocks, pre-tap setup and our things. And after step-by-step confirmation of previous point of interest zones and after updating of our high highs or low lows, we need to define the last point of interest zone from which we can enter the deal. And when we go to the lower time frame and in that point of interest zone, we look for the now formation, for example FUG for the block that's on a higher time frame, and only after that, after the breakout structure would confirm with our reverse of price, we need to enter with a good deal. And in this situation, if we open the deal from the beginning of higher FUG on the higher time frame, we get a bad risk reward ratio. But if we enter from the 50% for our time frame, we can get better risk reward ratio because it has a lower stop loss, but this can be more risky. So now we are on the real chart and we will look for the real example. So here we can see on the 1 day time frame uptrend movement, and you can say why we don't enter from this FUG, because all our time frame has an uptrend movement. Here we don't have a breakout structure, it's just sweeping of liquidity. Here we can name this point like a breakout structure, but it is on just for breaking liquidity and accumulate positions, and only after that, after the uptrend movement confirmed, we can define our FVGs and enter from them. For example, like in this situation, and after that we have a microstructure here. It's confirmed our uptrend movement, new FVG font, and we can continue and get a very good deals. And let's move to the 2-hour time frame. So what we can see here, we have a format FVG, and if we will reduce our point of interest zone, we will get a better risk reward ratio, because we can lower our stop loss and increase our revenue from this deal. And we can see here the confirmation of our breakout structure. Here is gonna be the liquidity capture for accumulating positions for next impulsive movement, and after that our uptrend confirmed, we get a good reaction from the price by 3 times its called free time setup, free capturing of liquidity, and only after that the price go up. And on the another example, we can see the first PG from which we can enter, and we can adjust our entry point. And after our deal begins, we can see a very good second point to enter the deal. So, and in this case, we can get 2 good deals with good risk reward ratio and earn 2x from this. So and why we don't enter the short deals? Because our 1 day time frame has a huge uptrend movement. In this case, you don't need to enter against trend. Here you don't look for the short positions, you only need to watch for long positions. For example, like from this order block, you can enter very good deal with good risk reward ratio. Let's say I will mark you. Like that, the price gets the reaction from it about 2 times. So in this case, the price gets the reaction from this point and from our low time frame zones we just mentioned. If we quick look on this chart, we can open 1, 2, 3 and 4 good deals for the catching this zone. And in this case, if our risk reward ratio are gonna be 1 to 3, we opened 4 good deals, which means we get 20% of our deposit, and to lose all win from these 4 deals, we need to lose 12 times. So don't forget about risk reward. It's gonna should be not worse than 1 to 3, and it will bring you a good profit in long term.